Hello everyone, it's none other than your boy Chatmaster here. I welcome you all to Chatmaster FX. I'm so excited and I'm happy that we are coming to an end of the completion of our course. It has been quite a long journey, and covering all this content is not easy. But I thank you guys for always supporting me, always putting those likes and comments and subscribing to our channel. And I hope you have learned something from the way we analyze the markets. The primary purpose of our strategies is to know where the price is and where the price is more likely to go. We do not believe in gambling in the market at Chartmaster FX. We believe that the market moves in a certain way and you need to do prognostication, predicting the future before even the event happens. That's the philosophy that we carry at Chartmaster FX. So guys, I hope you are also going to be profitable as long as you put the work, guys. You need to do your back testing, you need to do your forward testing. All these things are going to help you to make it. Forex is not for lazy people. You need to put the work, guys. If you don't put the work, then you never make it in the land of the living. So let's work. If you work, then you will see that things will start to work to your advantage. The puzzle will start to make sense to you. So yeah, today we are going to look at the flip trend line, which is abbreviated as FTL. This is one of the soldiers of the jungle strategies, and we are going to dig deeper on this standard operating procedure. So let's look at the anatomy of the FTL, the anatomy of the flip trend line. As you can see, guys, as usual, that there must be a valid decision point. It might be an MPL, which is our first choice goalkeeper, or it might be a QM level, or it might be a DM, or a valid supply zone. If this is a strong supply, then we can be able to use it. So the first thing that you need to do is to look at the past reaction. What happened in the past? Once we have this strong decision point, then we wait for an approach, which is what we call price approaching. You need to wait for an approach. The price should approach this decision point in a certain manner that can be able to convince us that the price is going to respect that MPL. So generally, if you look at all the price approaching strategies that we have at Chartmaster FX, you realize that most of them, there is a slow of movement of price. The price slows down as it approaches the MPL or the decision point that the price is reacting to. So once we see that slow movement of price, then we know that most likely this MPL or this decision point we will hold the price. But when we see that the price is coming with a heavy speed to the MPL, then it's more likely that the price is not going to stop here. It's going to stop maybe somewhere here or above. So we don't want to have such a condition. That's where we need to look for a price approaching. Once you see a valid price approaching, then it gives you an indication that the price is going to reverse at that certain decision point. So as I've said before, the first thing is to look for a past reaction that is valid. So here we had an MPL. So as we had an MPL, the price approached the MPL in a form of weak momentum, or it might be accumulation, or it might be compression. So as the price is approaching the MPL, there should be a valid or a clear trend line here of at least 2 touches. So once you have a clear trend line here, the conditions of the flip trend line, you need to wait for the engulfment of the trend line. Once you see this trend line being engulfed, then you wait for the second accumulation going towards the MPL zone. Then you can be able to place your trade there. So it also becomes more confluence where there is a break up of the trend line and also the engulfment of this higher low, where the price will engulf this higher low again. It gives you more confidence. But however, in order for you to trade the flip trend line, once you just see the engulfment of this trend line, then you are good to go. You wait for the price to accumulate going to the MPL area. So as you can see, guys, those who have been watching and following our tutorials, we have what we call the momentum shift. I presented one of those videos, and as you can see, it's more of a momentum shift, but it's different in the sense that we are not interested in the strong momentum to the downside. Even if it's weak momentum, as long as we have an MPO here and this condition happens, then we are good to go. So let's say it was a momentum shift kind of a standard operating procedure, and the price does a weak momentum going to the MPL area. Let's say you have missed a trade here, you were not sure that this MPA was going to hold the price or not, then you fail to put the trigger here. You may wait for the price to engulf the trend line, then you wait for the price to do the second accumulation going towards that MPL. Then you must place your trade. So take note that this second accumulation is almost at the 50 percentile of the first accumulation. You need to take that into consideration. So this case, guys, doesn't happen oftenly. Once the price breaks up this low, we call it break into compression. And once we have a break into compression, it means that we are expecting the price to reach our target before doing this accumulation. But if you are lucky and the price gives you a second chance, then you place your trade here and you put your stop loss just above the MPL in which the market is reacting to, and your target profit will be the depth of this weak momentum or this first accumulation that occurred here. So guys, this is the MPL section, which is a valid decision point or any other. Then you wait for the price to approach that MPL. Then once you see that all the conditions have been met, then you can be able to pull the trigger. So guys, this is the general anatomy of the flip trend line. So let's go to the terms and conditions of the flip trend line. There should be an MPL or any valid decision point. As I have alluded before, the price should compress to a valid decision point. There should be a clear trend line. The trend line must be engulfed. Entry, place a trade on the MPL or below the cap of the immediate created supply. I'll explain that further on one of the examples that we have. I actually made that example deliberately in order for me to explain this concept that I'm talking about on the N3. So the stop loss should be above the decision point. The target profit should be at the beginning of the weak momentum. So guys, these are the terms and conditions that I was explaining on the anatomy. So these are the rules, these are the procedures, guys. You do not need to break the rules. You need to keep the rules, guys, to to protect yourself, you need to keep the rules. Then you are good to go. If there are rules, then you are more likely to be consistent in executing your trades. And the more you become consistent, your chances of becoming a profitable trader goes up significantly. So guys, as you are trading, you need to have a plan. As you can see, guys, I presented many standard operating procedures in this course. I know some of you may not be able to trade all of them, but you just need to select a few and you do your trading plan. Once you write your trading plan, then you backtest it. Once you backtest it, you forward test it, then you can start to trade it. So yeah, it is important for you to have a trading plan, guys. It's very, very, very important, especially when it comes to the price approaching. You need to know all of the price approaching and all the journal articles, guys. You need to know them. Then you can choose between the defense. You can choose maybe to use the claw or the SDE, whatever you choose, or you can choose some midfielders, the Ken, the Quasimodo sniper. But however, the fundamentals, guys, you need to know the price approaching, guys. It's very, very important. You need to know all of them. And then the goalkeeper position, you need to know the MPL and all the subs you choose, the QM level, the DMs, all those things. You need to know them. Okay, guys, let's go to some chart examples. So here we are in example number 1, boom 1000 index on M30. So guys, on this first example, I actually put it deliberately so that I can explain that concept that I was talking about. So what happened here, guys, that we had a valid MPL. Once we have a valid MPL, as we can see that the price was compressing going to the MPL, which is what you call the first accumulation. Once we had the first accumulation, you can see that the second accumulation began at almost the 50 percentile going towards the MPL. And you can see, guys, that on the first accumulation, what happened is that the price actually engulfed this MPL. As we saw an engulfment of this MPL, it means that we need to now make an adjustment to our stop loss. So now we are looking at this new supply as our level of putting our stop loss. However, what this MPL has just done, the price is actually shown that we are respecting this MPL, but we were much volatile to a certain extent that we were able to engulf it. But however, it shows that this MPL is being respected. So once you see this thing happen, you wait for the price to engulf the trend line. Once you see an engulfment in the trend line, you wait for the price to do the second accumulation going to this new supply zone. Then you can be able to place your trade here, or you can then once you place your trade here, then you put your stop loss just above this new supply zone that we have. So to give room for your trade, you may put your stop loss above here. So this is the condition, guys, that I was explaining. So you may see sometimes that the MPL may be respected and might be engulfed, but now the price actually does a flip trend line, guys, and you see all the conditions that this trend line has been engulfed and the price now is doing the second accumulation going towards that MPL. Then you take this as your new supply and you use it as your determinant of putting your stop loss. So the safest take profit, guys, will be at the beginning of the first accumulation. So this first accumulation began here, so this will be the good target profit for you. So you can see, guys, that we had a clean demand here, and we're expecting the price to react somewhere. You can see, guys, the price reacted here, and you can see also here the price was able to react to some of these demands. I don't know, it was this one or this one, I don't know. So the price reacted here, but finally what is important is that our safest take profit was hit. So that's it, guys, on example 1 on the boom 1000. Let's go to example number 2. So on example number 2 here we have our substitute. Here we don't have the MPL, we have a QML, which is a quasi-model level. It's a very, very important goalkeeper also that can defend our team from considering some goals. So here, guys, you can see that there was a strong momentum to the downside, and the price started to move in a slow manner going to the QM level. So what happened here, guys, is that we can see we have our first accumulation here, and you can see that the price respected this QM level and the price dropped. And once the price dropped, then we can see, guys, we had a clear trend line here, and once we saw the engulfment of this trend line, then you wait for the price to come back in the form of a second accumulation going towards the QM level. Then you can be able to place your trade here, guys. So your safest take profit will be at the beginning of the weak momentum. That will be your first profit. Your safest take profit will be there. So, guys, that's it on volatility 10 index M15 here. Let's go to example number 3. On example number 3 here we are on volatility 10 index M15. So, guys, as you can see in this example, this is a buying scenario, and fortunately enough I was able to bring some examples for the buying setups here. So you can see, guys, that we had a strong momentum to the upside. With a strong momentum to the upside, guys, and we had our DM, our W Maru here. So what happened was that as the price was coming towards this W Maru, it came in the first accumulation, and you can see, guys, that once the price came in the first accumulation, maybe you may have missed this first trade, then you wait for the FTL to okay, the flip trend line to okay, and the trend line that we had here was engulfed. Once that trend line was engulfed, you wait for the price to do the second accumulation. You can see, guys, that as the market did the second accumulation, it actually went to the W Maru with higher speed, and this is a setup that is a price approaching that we call compression plus liquidity, CPLQ. So there was a CPLQ here towards the W Maru area, then you can be able to place your trade. So the price finally was able to rally up, and our target profit, our safest target profit, was hit. So our first or our safest target profit should be at the beginning of the first accumulation. So the first accumulation began here, it did not begin here. So but if you are tempted to leave some of your trades, you wait, you leave some of your trades maybe here or here, but your safest take profit will be here at the beginning of the first accumulation. I hope it's clear to you, guys. Let's go to example number 4. In example number 4 here we are on volatility 10 index M15. So, guys, the first thing that you need to look for is an MPL. Do we have a significant MPL or any other decision points that are valid? On this case, we had an MPL here. So what happened, guys, is that we had a first accumulation here. Once we had our first accumulation, we can see that the price was able to engulf this trend line, and you can see that the price compressed coming up to the MPL. Then you can be able to place your trade here. You put your stop loss above the MPL, and the price was able to drop to go to the area where we were anticipating us to be having our safest take profit, and our first take profit was hit here, guys. So that's it here on volatility 10 index M15. Let's go to example number 5. This is a buying setup, guys, and we are on volatility 101S index M15. So what happened here, guys, that we had an MPL here. Once we had an MPL here, what happened? The price dropped down and we had a clear trend line here. So what happened with this trend line? It was engulfed here. Once the trend line was engulfed, then we waited for the price to come back on second accumulation. So this was not a perfect accumulation, as we can say. Yeah, it was not perfect, but however it worked, and the price was able to rally up. So you put your safest take profit where the uh, weak momentum began. So this was not a perfect example, but it was kind of a gamble thing. But however, it actually met all the conditions. Only this condition of second accumulation did not occur very well. So yeah, guys, that's it on the flip trend line. I hope you have learned something from this tutorial. So guys, as you can see from our chart master formation, the flip trend line is here. It's one of our midfielders, guys. It's one of our midfielders that we use, and it's a very super sub that we use and can actually do the job, and can be able to change the match so that the team can be able to secure at least 3 points. So yeah, guys, don't forget to like and share and subscribe to our YouTube channel. And we also have our Telegram channel, those who may want to become members of the Chatmaster FX community. You are free to join, guys, and you can be able to also give your flashcards there, and they may be criticized, or they may be further improved, and you will see that your trading is not going to remain the same. So guys, join the winning team, guys, and we need to make sure that we are always winning in the market. We don't want to be depositing every time. No. We need withdrawals, guys. So join the winning team, guys, and change your life for the better. So yeah, it's your boy Chatmaster signing out.